Okay, so this is a million-dollar hot topic question. What determines home mortgage interest rates? I know you guys have been waiting for this one. The short answer is a mix of big economic factors and also personal borrower factors. So here are the things that you can't control, which are the economic big factors. The Federal Reserve policy. While this does not directly impact the mortgage rates do inversely respond to the Federal Reserve policy. When the Fed raises or lowers interest rates to control inflation, mortgage rates tend to follow suit. High inflation usually pushes mortgage rates up because lenders want to ensure that their returns on their investments are keeping up with high prices. The bond market, which is the 10-year Treasury yield. Mortgage rates closely track the yield on the 10-year Treasury note. When yields rise, mortgage rates typically rise. The overall economy, so strong economic growth can actually push mortgage rates higher. There's more demand for loans. While inversely, economic slowdowns or recessions can create rate drops because they want to incentivize you to go out and purchase. And then there's also housing market demand. If mortgage applications are slower, then lenders might drop mortgage rates as well to try to incentivize buyers to start looking in. And then there's also borrower-specific things that you can control. So things like your credit score. Better credit scores generally mean better rates. To a lender, your credit score tells them that you are a lower risk, which means you have a better chance to have a better rate. Your loan type also dictates what type of rate you get, so whether you're a conventional FHA, VA, or USDA loan. Your down payment amount can affect your rate as well. Your loan term can affect your rate, so whether it's a 15, 20, or 30-year loan. Your debt-to-income ratio, or DTI, is another term you might hear during the mortgage process, and that's another one. If you have a lower debt-to-income ratio, that is going to get you a better rate most likely. You can also buy points at closing to buy your rate down. And then also your property type and use. So if you're buying the home as a single family home and for your primary home, you're going to get a better rate than if you're buying it as a second home or investment property. So the market sets the baseline for your interest rate, but your personal financial profile determines your exact rate.